Welcome to a new video. Today it's going to be about building your altcoin portfolio. Before we continue with this video, I'd like to share some thoughts in which I've decided to adjust my content. I've been doing these YouTube videos for a very long time, providing a lot of technical insights in the markets, technical analysis based on trading and all. I just didn't feel it entirely anymore. That's why I've decided to pause and continue a lot of times as well. Still, I'm more than happy that we've been able to go through all these cycles together, sharing insights, learning from it as a whole, and increasing our knowledge on crypto investing and trading. However, I understood that I'd like to make this content where I share my experiences, my mistakes, my journey, as I'm ultimately just like you. Where you are in your cycle is where I've been too, and probably we are making the same mistakes as I've been on the same route and probably still am. So I'm trying to make the best of my own portfolio. That's why I've decided to switch this YouTube channel towards a channel where I share my vision, my thoughts, my experiences on a financially stable future. And most of that is through crypto. I'm more than happy that we've got to 163,000 subscribers on this YouTube channel. And I'm more than happy that you decide to watch my videos. Especially the past few weeks, I've had a lot of positive comments. Thank you for that. It actually fulfills me when you're commenting, watching, sending me messages that there are lessons in there that are helping you on your journey. A big thank you for being around, sticking with me through this journey, the good and the bad. And in 2024 and in 2025, crypto will be adapted even more. And that's why I'm going to put way more effort into and time into creating the best content, the most valuable content for you to make our financial future a stable and solid one. I'd like to make an agreement with you. If you subscribe to this YouTube channel, I'll make sure that I'll continue to increase the content as much as I can do. And I can share that there are some very cool things at the horizon, which are a new studio, a new concept, a new production, and also a new name. And it's all going to be there for you. In this video, I'll be talking about the important factors of the markets. Altcoins are important and they are often misunderstood, and perhaps the phrase altcoins is not entirely sufficient enough at this point. Overall, they can be traded, invested to a certain degree, and they can lead to increasing your return. But what I'm often seeing is that people tend to focus to the 100x to 1000x even return that people are chasing. However, that's not realistic, but a stable and consistent strategy going into the altcoin markets, that's what you really need to have, and that would be actually sufficient enough for you to survive the wildness and the volatility of the crypto markets. Therefore, I'll start explaining how you could value an altcoin, what are important metrics to look at, after which I'll be explaining more about the strategy and building a portfolio and the key metrics behind that. This part about building a portfolio, I'll be explaining more in the upcoming video next week, which is about a $1,000 altcoin portfolio. And that is not going to be including 100x's and stuff, but it's actually going to give you guidelines on how you should be trading such a portfolio. Finally, we'll round off by a part surrounding the information of how you actually trade and scale out of the markets, through which we are also going to make more content in separate videos. Enjoy! Of course, we first need to look at the markets, as the markets have been going ballistic. So before we dive into the altcoin portfolio, there's something that we need to see, which is the markets. And congrats, Bitcoin is currently close to a new all-time high. Maybe, just maybe, we're going to find it pre-halving, but at least the strength that we currently see is unheard of, and it's not shown before an halving ever, which means that Bitcoin is currently swimming around $62,000, which actually reached 63.9, and it's just close to an all-time high, as you can see on the charts. And there are a few reasons for the fact that we are having this upwards momentum. First of all, of course, we've got the inflow in the ETF. This chart shows the ETF spot Bitcoin inflow, which is currently reaching a number of total 7.5 billion, which came into the markets. What is important to see here is that the inflow is mostly coming from BlackRock. 500 million on the 27th, 600 million on the 28th, another 600 million on the 29th. Question is whether that's going to stay. Ultimately, the inflow is causing a lot of upwards momentum to the markets. It is a multiply or a multiple of the amount of Bitcoins being created on a day. Of course, that means that when there is such a low supply on the markets, there is a high demand, price goes up. And we've seen in the past few weeks that the interest from the institutions is sufficient, leading to the case that we're close towards an all-time high, and Bitcoin getting into the highest monthly gain, as we can see from this chart, $20,000 increase in 1 month. And actually in 4 months time, we have been rallying from $25,000 to 64. So pre-halving, this strength is super strong, and there is a likelihood that we're even going to have a higher increase of that in the upcoming periods. But $20,000 in 1 month. And also something interesting to look at is the fact, as Quinton has been tweeting here, the flows into Bitcoin and into the gold ETFs. Bitcoin is essentially digital gold. And since the launch of the Bitcoin ETF, you can see that the flow has been going out of the gold ETF and most likely partially going into the Bitcoin ETF. So the narrative is probably that these two are comparable to each other, but Bitcoin is just a higher beta and probably has more upside than gold has at this point. Hence why the reallocations are happening towards Bitcoin. From this is an old chart, but until the 13th of February, close to 4 billion came into the markets in Bitcoin and close to 2 billion went out of gold. Ultimately, the past 2 days, we've seen that also gold is following suit with Bitcoin, which brings me to the narrative that most likely the inflow into Bitcoin and gold is coming from a certain increased fear of the dollar collapsing in the coming few years. But obviously, this is putting a lot of momentum into the markets, as right now we can see that the total market cap from September until now has been going up by more than 100%. The total market cap is currently at 2.25 trillion. Still far away, or not far away, but it's far away from the all-time high, which is 3 trillion, which is like 25% still. Still down 25%. So there's still around 30 to 40% to be made, which means that the most significant group that is lagging behind is the group of altcoins, which we're going to discuss next in the next chapter. The first important part that we need to understand is that Bitcoin has accelerated close to its all-time high. Secondly, the markets are different in a different dynamics than 2021. Why is that? Well, 2021 we had a phase where there was not really a new group of participants joining the markets, but yet we had an unlimited supply of money coming into the markets based on the fact that interest rates were low. Everybody was getting money, government money, basically helicopter money, I would phrase it. So the short, heavy market that we had in 2021 was indeed part of the 4-year cycle, but completely different than the scope of interest that we are having at this point, which is a magnitude of what we've seen in 2021. And in terms of growth, you can actually look at the 2017 market more than that you're looking at the 2021 market, to which the valuations of projects and markets are going to go through the roof, are going to be higher than what we have been anticipating, because we've already seen the strength in Bitcoin. I don't have Bitcoin up here, but what we can see is that Bitcoin is close to its all-time high. And because it's close to its all-time high, there is more money in the markets, which means that that money that is going to rotate towards altcoins is going to perform and enhance a return that is probably getting underestimated at this point in the cycle, because there is still the bear market stigma, and there's also still low expectations based on that. So we have seen some altcoins breaking all-time highs. I think in this first cycle where the altcoins are waking up and they do it in multiple rounds, this is probably the period where altcoins are getting close towards their all-time high or break it, depending on the interest that we have in the specific altcoin. And that's why the first part is valuing altcoins. Usually we value altcoins against USD, but when you trade altcoins, you want to outperform Bitcoin, because the profits that you make is the profit you make in Bitcoin. And you want to use that data by looking at data that is providing you interest into the Bitcoin pair, rather than looking at an altcoin that is having interest in the USD pair. And I'll show you an example of this, which provides you data on what an actual strong altcoin against Bitcoin shows. So when we take the data from a specific altcoin and we take the 1st of October, all right? So we're looking at the 1st of October, in which Bitcoin came from $27,000, right? And it exceeded towards the high that we have here. So Bitcoin against USD on TradingView has been doing 130% in return. Now, when we take a few examples, and the first one that I want to use is Solana. Again, 1st of October, which we can find in this candle, we have yielded a return of 501%. So it was a better decision to be into Solana from that point in time than in Bitcoin, because it yielded a higher return than Bitcoin did in the same period. All right. Now, when we take another example, we take Matic, for instance. We take the 1st of October, which is this candle. It is up 104% against USDT. So now we have 3 examples. We've got Bitcoin, which has done 130%. We've got Matic, which has done 105%. And we've got Solana, which did more than 500%. The lesson you can get out of this is that by holding Matic for that period in time, you would have lost BTC value. By holding Solana, you would have been better off because it yielded a higher return than Bitcoin. And how can you actually see when something is doing well is that you're looking at the specific asset against Bitcoin. In this case, you can see that Solana against Bitcoin is, since the 1st of October, let me see, is up 162%. And when you multiply that number by the return that Bitcoin had seen, you're going to get close to the number of 500%, of course. So you can see that there is strength for Solana against Bitcoin. And when you're going to look at the same data point, where you're looking at Matic against Bitcoin, we need to look at the first, which is this candle. It is down 16%. So the first point that I want to make is that in order to actually make a return with altcoins, you need to use the right base pair. And because altcoins are providing a return against Bitcoin and you want to outperform Bitcoin, you must add the Bitcoin pair towards it, making sure that you're looking at the right investments and that you're looking at the right valuations. And that is why, and that is also what we're going to discuss in a little bit, is that altcoins are very, very undervalued at this point, especially if you look at things like Matic, which are at cycle lows against Bitcoin. While on the other hand, if you're looking at Matic against USDT, you can see that the USDT value starts to wake up, but still has a lot to gain to get towards the level of the all-time high or where Bitcoin is. So yes, looking at USDT pairs might give a different view than what the reality shows, which means the Bitcoin pairs are definitely the ones that you should be looking at. So where do you start if you want to get yourself into an altcoin position? Well, first of all, Miles has been giving this data. The interest into the markets is currently still zero when it comes to retail. Retail is always mostly interested into altcoins rather than Bitcoin. But the Bitcoin searches are at this point still at cycle lows. It's comparable to the period that we witnessed in the previous years. And it's slightly starting to wake up, but there's still no interest at all, which means that there is still a lag into altcoins, because if altcoins are lagging behind, then there is no search, because people actually believe and think that they cannot make a certain return into Bitcoin. They need altcoins to actually make a serious amount of money out of it, which in some way I agree to. But given the fact that the searches are not there yet, it means that the interest is still not there. Pre-halving altcoins are always a great period to get into them, that is basically through two charts that you need to look at. So first, we discussed the Bitcoin chart at the beginning. We discussed the Ethereum, the total market cap chart at the beginning, which are both in this region, which means that total tree is a chart that we use and that we exclude Bitcoin and Ethereum. So this value is excluded Bitcoin and Ethereum, and it's just barely waking up. The current valuation is at the low of this range, which is comparable to February 2022, but it's also comparable to Bitcoin at 30K. So what you see is that Bitcoin goes first, Ethereum is pacing up, but also not yet, and then the altcoins will follow suit. It is still the same material, but it's getting a little bit more complex because specific ecosystems have been front running the markets, in which Solana, Injective, those ecosystems have been thriving a lot and have been gathering interest. But if you talk about Bitcoin Ether and the ecosystem in Ether and everything surrounding that, the sentiment and the faces are still the same. So the conclusion we can draw out of this chart is that likely we are going to get some more momentum coming from the altcoins rather than coming from Bitcoin, which, as a matter of fact, if you look at the Bitcoin dominance, is that you can see that the revenue or the return are primarily coming from Bitcoin, but still pre-halving. And I mentioned this many times before. Pre-halving is that you're looking at a case of altcoins being heavily undervalued. And yes, the return of Bitcoin in this period has been higher pre-halving than what we witnessed in previous cycles, which also means that there is a lot more momentum to gain when it comes to altcoins overall. So if Bitcoin goes higher, you're also going to expect altcoins to go higher, because there is more interest into the markets and there's more money to generate a higher return. Now, when we know this, and we still know that the altcoins are far behind Bitcoin, when can we actually enter them, and how can we conclude that that is actually true, given the fact that we're looking to outperform Bitcoin and Ethereum, especially Bitcoin? If you're using Ethereum as a base pair, you want to outperform Ethereum. You also want Ethereum to outperform Bitcoin at certain points in time, so that's more tricky. But in order to generate a return, we invest into altcoins that are on the ground, undervalued, not being discussed, because that's when we are early in the cycle. That is not when we're one of the last groups yet to buy into it, but we are early. So now I'm going to show you a few examples of how to value an actual asset, or how to see what the markets are doing. In this case, we've witnessed Chainlink against Bitcoin. Chainlink is up to close to $21, actually above it. And the weekly candle is looking great. We've seen a tremendous bounce here, but we've also seen pretty harsh corrections taking place. And slowly but surely, you can see the money moving from Bitcoin towards altcoins, especially with this weekly candle happening here, and yet it's still far down from the previous all-time high witnessing in 2020. The thing is that you want to outperform Bitcoin. So when you want to see that, you want to see the Chainlink is on the ground, close to its higher time frame support, and not here close to a new all-time high. So even though it's up to $21, the value of it is still relatively low compared to the Bitcoin value or Chainlink to Bitcoin. So the value is still very low at this point. Another example that I would like to give to you, based on the Bitcoin valuation, is Chainlink, or it's Cosmos, which is essentially still making a cycle low. It's on its lowest point since January 2021. It's providing a potential weekly bullish divergence, and it's probably going to start a new cycle from here, which means that the Bitcoin valuation is so far ahead or so far behind at this point. So these are charts that you're interested in at this point. And why? It is because if you're looking at Bitcoin, you are also going to be interested in these regions. In hindsight, you would have been great or happy to be buying here, despite the fact that it's super difficult to do so because nobody will tell you to do so. While on the other hand, right now, during this period, people would love to say to you, you need to invest into Bitcoin, but they will not tell you to invest into Atom because it's just showing that it's on the ground and it's just continuing to fall downwards. And because it has been downwards only, people will continue to say that it will continue to fall down. While on the other hand, the rotation is clearly there because fundamentally nothing changed. It's still a very strong project, but you get the point. There are many out of there that are still on the ground. Matic, Cosmos, and I'll show you a few. The point is, if you're also looking at Ether pairs, it's making it a little bit more tricky. For instance, Solana against Ether has been breaking out heavily, but it's currently swapping its trend. But if you look at Chainlink against Ethereum, you can also see that it just barely started its uptrend. It has been going down since August 2020 until June of 2023. And now you can see that from a technical point, we start to reverse the trend. And that is the argument that you need to find. So in order to value an altcoin, you need to look at the Bitcoin pair and the Ether pair. And if you're looking at USDT valuations, you need to be looking at Bitcoin against USDT rather than the altcoin against USDT, because your goal with altcoins is to outperform Bitcoin. The golden rule though, do not invest into an altcoin that is having a run already or has seen its run. Invest into an altcoin that is not being broadly discussed on social media. Some examples, we've shown Chainlink against Bitcoin, we've shown Atom against Bitcoin, Polkadot against Bitcoin is another one, Aave against Bitcoin is another one, and I can simply continue to do so. Matic against Bitcoin is another one. We are just literally mostly on the start of this entire bull cycle, as the Bitcoin valuations are still super low. So that's about how you should be valuing those altcoins. Our mission is to provide you all with a financial stable future through crypto. When I started, I felt overwhelmed and it was hard to find the right information on the markets to keep up with the latest news. That's why I've decided to start our consultancy. If you have a busy day-to-day life but are having a crypto portfolio and are unsure what you should be doing with it, how you can consistently build a strong portfolio and manage that well, we are here to assist. There's no need to have this fear in the markets. We can help you to make the best of the markets as we build portfolios for you and assist you based on your own risk preference through the markets. Our example portfolios have been yielding a return of 110 to 140% since September 1st, through which you are able to decide which portfolio you'd prefer based on your own risk appetite, and we craft a handmade portfolio for you. Click on the link in the description below to get in touch, ask your questions, and we're going to take it from there. So now the next part is about understanding how and when and where you should be building a portfolio. And in this chapter, I'll try to explain the key concepts behind such a portfolio. The key concepts are important to understand because every portfolio has its own preferences, risk tolerances, and there is no uniform way of building a portfolio. However, you can actually have key principles in place, making sure that you're building a portfolio in a proper way. And that's why we're going to discuss this part. And in the previous part, we were investigating into altcoins and we were investigating into the values of those altcoins compared to USD, compared to Bitcoin, compared to Ethereum. And when we know that knowledge, now it's important to understand how you can actually build a portfolio. Before we continue, we have some general guidelines that I would like to discuss with you. First one, if something is too good to be true and an altcoin has been going up massively, avoid taking the opportunity of buying this specific altcoin. You are basically the exit liquidity for someone else and you are not one of the first buyers. You are a laggard. You want to be on the early stages of that curve, not on the last one. And one of those examples is basically Bonk, which is a meme coin on Solana, which has been going up massively and therefore is not providing an interest into you unless something is going down 90% for a long substantial period of time. Then it might become interesting. Additionally, if an altcoin has been going up massively, there is opportunity costs, which means that, for instance, an altcoin has been going up 10x and another altcoin is on the ground. It means that there is still probably a return to be made in the first one, but compared to the risk of having that actual altcoin in your portfolio, this one might drop 50% and might go up 50%, but the one still on the ground, if that is fundamentally still strong, might go up 4x and still drop 20%, which means that your risk reward appetite is better by holding this one and is maybe providing you an opportunity cost compared to the one, or actually opportunity benefit compared to holding the one that has been running up. And that is basically in line with projects like Injective, Solana, Runder. They have been doing great, but that doesn't mean they continue to do so, and it doesn't mean that from here it's going to outperform another asset. So that's why it's important to take a look at the opportunity cost and the values of an altcoin. Another thing is, if an asset starts to run massively, avoid chasing the trade. So that's what we discussed last week in buying the dip in altcoins. If an altcoin starts to trend upwards, avoid chasing the trade. So look for corrections before taking a position. In general, give and take. You're able to start allocating if an asset drops by between 25 to 60% from the previous high. And these are the standard corrections. So if something starts to trend up, it has corrections. And if you take the opportunity to buy the corrections, it is the same as the previous example. If something goes up from 100 to 200 and it didn't have any correction, likely it will at some point. And when the correction takes place, the profit takers are out and the people who are interested into it are getting into the position. So mid-run, this is the way that you should be looking to allocate into it to avoid taking extensive risks in your portfolio. Then the final one is that, and we're diving into this a little bit more, but if you start taking profits into an asset, allocate the profits towards assets that are having a lower risk appetite. And I think this is by far the most important one, because I know for a fact, and I've been doing this, if you have returns into an altcoin, people tend to do it again and put it into another altcoin. But if an altcoin goes up and the other altcoin does it as well, usually they are correlated with the markets. There's a high way of correlation in the markets. But you should realize that if your portfolio starts to grow and you do not rebalance your portfolio, it's going to cause you a lot of pain on the way down. Altcoins are not going to continue running. They usually do for a very short period of time, and then they drop. So if altcoins go up, they usually do it with all of them. Within the ecosystem of Ethereum, all of them go up. Within Solana ecosystem, all of them go up. So it's important to understand that if your portfolio grows, start taking money out and put it into risk-averse assets. An example, your portfolio is worth $10,000 and your personal income is $2,000. You're having a full allocation into altcoins, which enables a lot of risk, and I would definitely not advise you to do so, but hey, just take the example. And it's looking at a potential upwards momentum because the markets are just looking good. If at this stage your altcoin portfolio drops by 20%, then it's not having that massive of an impact of your portfolio. However, if the altcoins start to do well and you have an income of $2,000 and your portfolio increases to $50,000, then if a correction takes place of 20 to 50% at that point, it is going to induce a lot of impact to your portfolio, and that impact is hard to come back to. If you drop 50%, you need a 2x to come back to it. So you need a lot of work, you need a lot of control of your emotions, which is usually when things go wrong. The first thing is not rebalancing your portfolio in time. And because you're not doing so, you start to drop in value. And then the circus of making multiple bad mistakes overall are going to take place. So what I would like to say is that if you build a portfolio, use this rule. The lower the market capitalization, the more volatile the asset will be, the less you should allocate. So if you invest into an altcoin and it's in the top 10, you can invest more because there is less risk involved than something outside of the top 500. If something has a market cap of 1 billion and something has a market cap of 10 million, you need to allocate less in the one that is valued at 10 million. Then also, when we talk about technology and also about this topic, is that you invest into technology, which means that Bitcoin has lower risk because it has endured a lot of attacks and market momentum and market volatility. This, through the fact that it has been going through all these cycles, it's lowering the volatility, and therefore you can allocate more towards it because the chance of a failure are just lower than when you allocate into something that is entirely new or just experienced one cycle. And that's why I also advocate to look for a case where you're looking for rebalancing at some point. And I'll try to do it by volatility. I'll try to show you an example within crypto and outside of crypto. So for instance, Bitcoin as a whole has been going up by 130% in a time span of 5 months, and it has a volatility in between. So within a window of 5 months, you can say, okay, Bitcoin goes up 130%, but it can also drop 30%, right? Now, if you look at Solana, it has been going up by 500%, but it also has a higher impact downwards, as it has been seeing corrections of 35 to 40%. And if Bitcoin is going to have a larger correction, likely Solana is going to drop by 60 to 70%. So if your Solana allocation is going to increase, you need to reallocate towards assets that have a lower risk appetite, which is in this case Bitcoin. And the same goes for having an entire crypto portfolio, that if crypto goes up and other assets do not do so, but in general your portfolio starts to increase more skewed towards crypto, your risk is going to be higher, which means that you need to allocate from Bitcoin towards government bonds or gold or just cash, because there's less risk involved by having those assets. Now, you can even take it even further. So now we discussed Solana against Bitcoin, but what if we discuss crypto projects that are built on top of Solana within the Solana ecosystem? So now we know that Solana has been going up by 500% and it has been going down between 30 to 50%. If we're looking at something that's within the ecosystem, for instance, Bonk, yes, Bonk, actually I have to show this chart, you can see that because it's a meme coin, and I actually need to put it on logarithmic chart, I guess, please, thank you. It has been yielding a return of close to 20,000%, which is astonishing. But then also what we can see is that because of it, it also has a correction of 75% in between. And probably it's going to go down 90% if the markets have a U-turn. So all I'm saying is that Bonk is lower on the list, which means that if you have Bitcoin, Solana and Bonk, most allocation can be done in Bitcoin, then Solana, then Bonk. And if one of them starts to outperform the other, you need to rebalance to the one that is having a less risky appetite the higher you get with your portfolio. So the general rule of thumb is the higher the market capitalization, the lower the volatility, the higher the allocation. Also, the lower the market capitalization, the higher the volatility, the higher the chances of a failure, the lower the allocation. Quite often you'll hear me talk about new altcoins versus old altcoins. In the previous part we have discussed that the lower the market capitalization, the higher the volatility, the higher the chances of a potential failure, hence why the lower the allocation. In some way, this is also the case for new altcoins. Blockchain is a technology which is a constant development of fixing problems, which have been arising in the previous bull cycle. Hence why newer altcoins have the potential to generate a higher return, but are also having a higher appetite of risk, as there is still a chance of failure. There are probably multiple other cryptocurrencies that are doing the exact same, so there's a lot of competition going on, which needs to be adopted into your portfolio balance. I've got an example for this, which is Phantom, Matic, Avax, projects from the previous cycle that actually started to exist because they were solving a scalability issue that Ethereum was facing back in the day. That is essentially why it started with all of them. Solana, identical. The adoption took place towards layer 2 because it was quite sure that Ethereum couldn't handle all the blockchain transactions in one go. Very similar to other payment providers, and also similar to what Bitcoin is having, which is Bitcoin can't control or can't handle all the transactions either. That's why you need a layer on top of it to actually making sure that the settlements are done weekly, bi-weekly, etc. Previous cycle we've seen Phantom, Matic and Avax. And previous cycle we had Lightning and a few others trying it on Bitcoin, which didn't exceed. Now we are further, which means that nowadays newer layer 2s are getting to the horizon, fixing problems that those earlier layer 2s were facing. Hence why a higher ROI with these newer layer 2s is provided, because they are trying to solve a case that the previous ones were trying to, which the previous ones were having. And it's advanced technology, and usually the valuations of these advanced technologies are lower than the old ones. So if you're building a portfolio, I would generally advocate for the following guideline. With layer 1s and essential use cases, oracles, layer 1s, Bitcoin as a whole, I would suggest for a large allocation towards those, as they need to endure multiple bear markets before they can be staying in the markets. Bitcoin has been going through multiple. Ethereum has been going through multiple. Chainlink is going through multiple now. So you can start allocating towards those by a large allocation because the risks are lower. Now in terms of layer 2s, DeFi or specific use cases like RWA, Deepin, all new segments or segments that had its first run and are advancing at this point, look for smaller allocations in newer projects that have newer technology and therefore have a larger potential upside to go for. So now we're getting into the part of, hey, we've valued altcoins, we have built a portfolio, and we are looking to trade that portfolio or manage it accordingly. And in this chapter or in this part, I'll be trying to give you all the metrics you need, making sure that you can actually make decisions in a better way than what you have been doing before. So ultimately, if you're looking for an altcoin portfolio, if you're looking for an allocation into altcoins in your portfolio, these swings will be astronomically. So these swings are going to be super high. Your portfolio is going to swing on a daily basis by maybe even 10 to 20%. It's going to be a roller coaster. And because it's going to be a roller coaster, it will be having a lot of emotions involved. And because it is having a lot of emotions involved, you need to make a plan prior to it, to making sure that if you are having a plan that is rational and that is based on data rather than day-to-day decisions, you are going to be outperforming almost everyone in the markets. And I'll show you a few examples of what the markets can actually do. So first of all, this is Bonk, which has been doing a 20x in just a matter of like 8 weeks. Solana, if you're looking at the chart, has been going up by 6x or even more. It has been going up 15x since it hit its low in December of 2022. You can see the vertical chart that we have been anticipating during the bull run in 2021, which was a very short one. The peak took place in 15 weeks from its low in July 2021 of $22, and then it pulled a 12x. And from there, it was just, let me see, this one needs to go here. From there, it took approximately 30 weeks to go down to $20 again. So within a window of 45 weeks, you essentially go up 12x and you drop another 90%. I'm not suspecting it's going to be the same this cycle, but for most altcoins, it will be. Now, if you look at Chainlink against Bitcoin, which is our ultimate best guess of looking at valuations, we take this low. It took 19 weeks for a return that we provided of 400% against Bitcoin. And technically, it took approximately, I need to take the actual date range. It took approximately 20 weeks to go back all the way. So within 40 weeks, we yielded a return of 4x against Bitcoin, and we came down by 80% in the same period. So that is why valuing altcoins is super important. Being able to build a portfolio, but also being able to balance it out in the right way, which means that the key metrics that you should be understanding when you're trading altcoins is that you need to combine the Bitcoin and USD charts. I've been going through the BTC parts over and over again in this update, in which if it starts to go up from the lows of the cycle, that is when you want to trigger yourself to get into a position. For instance, Chainlink now has barely started its bull cycle. And you can see from the previous cycle that from here in June 2018, it took 2 years before we get towards the peak high. From here, June 2023, it's likely going to take until here before we're going to get into a peak high. Maybe even later. Which means that where do you want to get in, just comparable to this chart, is when it's valued in a low manner against Bitcoin. And in this case, it is the same. It is valued super low against Bitcoin. You don't want to take a peak entry because that is when you're out. In this period, everybody on social media will be talking about it, but you need to position yourself in an early stage. Now, the next one is that nobody became worse from taking profits. So the essential part here is that if you don't need to get married to your positions because it's a crypto project. Just start selling. Ultimately, your goal and mine is to make the most of your portfolio. And if that consists of having 0 altcoins or some altcoins, or at some point 0 crypto or all in crypto, ultimately it is about keeping your purchasing power and to do the best for your portfolio as you can, which means that you take the entry into altcoins when they are low, when you take profits, gradually or not. You say, hippie, you have done well, you've made the right decision, you've been doing well, and if it continues to go up and you are out of the position, who cares? You can only look back to it and say, okay, based on what I should have known by that day, I probably should have done it a little bit different, but I didn't have better information, so it's fine. You need to take the profits. You need to look at the portfolio growth that you're having, and you should be moving on. So, as I mentioned, you can look back, but look back in a way to evaluate your own decisions based on that specific moment, rather than feeling ashamed of what you have been doing. Because ultimately, having a return is better than what most people are going to have. Having a return in a positive way isn't really that likely to happen. Most of the people are not gonna make money. So if you do, congrats. If you have survived the bear market and you're currently positioning into altcoins, you're getting rewarded for staying in the markets for the past 2 years, which 99% hasn't been doing. So now, if you are in a trend, so for instance, if there is a trend and you want to get into a position, the general rule is to take a position when the altcoin is dropping by 25 to 60%. Here you can see it as well. Chainlink against Bitcoin has been dropping by 25 to 60% multiple times. So if the trend remains to be upwards, you need to get into a position in those factors. So this is in line with what I've been saying. And I want to show it through Solana as well. If something is starting to run and goes vertical, it is very tempting to get into a position when you see this momentum. However, it always has corrections. And if you decide, hey, from 25% and lower, I take a position, that's the point where you want to get into. In the case of Solana, it has seen a 35% correction. If you were starting to do it at 25, you would have been allocating here. You would have been yielding a high return. If you would have been buying here, you would have barely had any return, but you would have been having a lot of risk. So if you are mid-trend or in a trend, use that as a general guideline. Now we get towards the most important part, which is how to rebalance your portfolio, or at least how to trade. And there are 2 ways you could do this. One is you essentially are buying an asset at a certain point. Let's say you've been saying, okay, I buy Solana. I'm going to be selling on specific numbers. So at $30, I sell 5% of my portfolio. $40, I will do it. $50, I will do it. $60, I will do it. And I will just gradually start selling. That is one way of doing it. But then still, you continue to have a lot of risk involved in your portfolio, because if you're not starting to sell more and more and more and more, you are at some point going to end up having a large allocation into Solana, through which that allocation is going to have a lot of risk, because if the correction takes place, it's going to be impactful for your portfolio. The other way around is that you're looking at a rebalancing of your portfolio. So, for instance, if you are allocated towards altcoins and you've got 5 altcoins, 4 of them are not doing anything, but 1 of them is going up a lot. Let's say 3x. All right. So you've got a portfolio of $10,000, $2,000 in every altcoin. 4 of them do nothing, and 1 is going to $6,000. So your portfolio is $14K. Now that $6,000 is close to 50% of your portfolio, and the other ones are smaller. So what you should be doing is, independent of what the markets are doing at that point, is that if something is starting to increase that much, you need to take a weekly, bi-weekly or monthly moment to rebalance your portfolio and shuffle the one that has been going well towards the ones that haven't been going well, making sure that you take the profits and that you can keep on compounding those returns by stacking it further into altcoins that have not been running yet. And then the most important part is that if your portfolio is consisting only of altcoins, or if you are having a large allocation into altcoins, this concept of rebalancing should be done at any time. So if you have an altcoin portfolio that is worth $10,000, just as an example, and you don't have any outside investments, you don't have anything in safe assets relatively as Bitcoin or gold, then it is very much advised to start scaling out at some point. So for instance, if you hit $20,000, you do a 2x, I would suggest to take profits above that number and put that into gold and Bitcoin. So if you're at 20k, every dollar you make more profit, you put that into Bitcoin or gold until you at least get to 20k and 20k, and then you can start increasing the risk again, because then you are de-risking your entire portion. And of course, this is going way further than just one example. This is with everything. This is the key of your entire portfolio, is to be able to reallocate, to rebalance, and not caring about the markets at all, because ultimately you will be chasing those returns, and ultimately most will be ending up by the risks being rewarded, which is the fact that if you consistently hold onto a very high risk portfolio, you end up by the risks involved, which is you go down 80 to 90%. And by gradually adjusting that over time, by also having cash reserves, remaining flexible, rebalancing the portfolio, you're actually able to survive bull and bear markets and have a financially stable future. I hope you have been enjoying this video and it has been providing content for you on your journey towards a financial stable future and hopefully freedom. If you did enjoy the video, would you be so kind to share your thoughts in the comment section beneath? All the feedback is obviously helpful, very helpful, by building and helping and continuing the level of content we aim to provide. Thank you, and I'll see you again next week on the new video on building a $1,000 portfolio.